Welcome back to the Specialist Scoop by Aria Finance. I am delighted to have Adrian Moloney join me today, industry giant, Adrian. So Adrian's with OSB. Can you tell us a bit about your role? What's your...
Yeah, so I'm the Group Intermediary Director at OSB. I guess for those of it, people that don't know it, because it's not our lending brand, I oversee our lending channels, which are Kent Reliance for intermediaries, Precise, and InterBay, and I sort of run all of the collective sales force that works there, whether it's the people on the phones, the people you see in the field, the BDMs, or the management team. So yeah, quite a wide,
quite a vast
job.
role. Yeah.
So it's
How many
it's good
years
fun.
have you been there now?
10 in December.
10
10
already?
in December, yes. So
God,
where does it
time
go? Where does it
fly?
go?
Yeah.
No black hair left, but years of fun. So it's been good.
And you've been in the market a long time. Tell us a bit about your journey and your career.
Cool, blimey, yeah. So I guess it was 1996. So that's nearly 30 years, is it? Nearly. If I do the maths, and almost by accident, I guess, like a lot of people, I kind of didn't really know what I wanted to do. A lot of people won't remember the brand, but a company called Mortgage Trust opened in Epsom, where I live. And I just ended up working in the call centre and sort of progressed through various roles there. One that was pretty exciting, which is I worked in what was the biggest broker in those days, John Charcoal, looking after that account. And then I went to work for Portman, which eventually was bought by Nationwide, and worked in the sales team there. And then 10 years ago, I decided to bite the bullet and go back to working in sort of specialist lending, which was with OSB and Kent Reliance at the time. And then, of course, we brought Precise into the family, if you like, and here we are today.
Yeah. I mean, it's moving from mainstream to specialist. How did that feel at the time? Like, obviously, I think there's now a bit in the middle, which has probably become a little bit more intermingled. But back then, it was probably two very different halves of the tale.
I think the biggest shock was when you come from a massive organisation, not just in terms of structure, but in terms of the volume of business they write. And day one, you sit there and look at the difference, and it comes in, you think, have I made the right decision? But actually, it's in the 10 years, it's grown beyond all belief. But it was totally different to go from that level of size down to something much smaller, but much more nimble and much more agile, which was the fun part.
Over the years, we've seen a little bit of a progression from the more heavy specialist end of the market into the more mainstream. There's a lot more crossover, and I think Kent Reliance is a really good example of that, isn't it? That the appetite has grown and grown, and there's more that you would take on than going back 5 or so years that you would have ever considered.
Yeah, so if I think 10 years ago, I guess Kent Reliance did a small amount of resi, a bit of shared ownership, and was just a home for limited company buy-to-let in the main, because the high street didn't do limited company buy-to-let. As I guess the market's evolved, over 10 years, the high street's kind of come into limited companies, particularly this year with some other lenders, but they don't really do those large portfolios or slightly complex properties or just where customers have an unusual circumstance. I think that's the beauty of where Kent Reliance sits and the relationship it has with brokers is you can pick up the phone, talk a deal through, and actually it probably does a little bit more than some of the other middle specialist grounds.
And your new brand then, Rely, where does that fit in?
Well, yeah, thank you. And thank you because you guys have helped with the pilot and the launch. So we're still in that phase of bringing it to market. But it will
actually, the feedback from my team has been really positive.
And I haven't paid you to say that.
You haven't
thank
paid
you
me
for
to
that.
say
No,
it's genuine.
It genuinely has been really good. And just on where we'll Rely sit, Rely will be the buy-to-let brand for the group. So what you'll see over time is that we'll stop doing buy-to-let in Precise, and that we'll retire the Kent Reliance brand as a whole. I guess within the name that we branded it, there's a little bit of a throwback to the heritage there with Rely. But I'm really excited about it because not only does it bring, I guess, the bit we've talked about there, the bit about Kent being a specialist, still the ability to do all of that. But we've worked with brokers like yourselves to go, how does this platform work? How do we take the heavy lifting out and leave the proper underwriting to the humans?
Yeah.
So yeah, we'll bring that to full market very shortly. But I think it's going to be a game changer, if I'm being honest, in the specialist market because, not we've always been hamstrung by technology, but actually we haven't been able to do a lot with technology. We've built this in-house, and we're able to sort of react to market bits really quickly. We've had brokers involved in the build, and yeah, I'm really excited to get it to market. So yeah, it will be the the buy-to-let brand for the group.
Yeah, and actually, you mentioned brokers quite a few times, and you have the word intermediary in your title.
Yeah.
You are intermediaries through and through. You've always worked with intermediaries, and that's true, I think, of all your brands. They're all intermediary facing, aren't they?
Yeah, I mean, I often say to people, probably OSB as a group and a collective is the largest intermediary only brand in the market. There'll be a number of my competitors and a number of people in other brands going, well, we do more business that, but a lot of the high street brands have direct channels, direct to consumer. We don't. And I look at, we set up a high net worth team for our larger borrowers. So we have a relationship almost, I think your colleague said, outside a concierge service for those. But that's done in tandem with the intermediary. So everything we do, and we see brokers at the heart of our business, is focused around working with you guys.
Yeah.
I think we do it well.
Yeah, you do it well. And actually, it only really, as I asked that question, it only struck me that really you don't have that direct presence. No. And I think we see that ebb and flow a bit in the market. Yeah. You see a lot of lenders, and I've seen it over the years, they chase the distribution because they think that going direct to market is the holy grail. Yeah. And sometimes that means cutting out the brokers. Yeah. And generally, it doesn't end well, does it? I mean, you see a lot of lenders come back full circle after making that decision.
Let's go and make friends again, isn't it?
Yeah.
But I won't speak for other people's lenders or other lenders, but the bit for me is about 90%, I think, now of all mortgages come through the intermediary channel post MMR.
Obviously, is it as high as 90%?
I think it is with some channels or with some lenders. Certainly, for us, it's all of it. But actually, that's more of a bit that I'm sure clients need advice. There's so much choice. Even look at the specialist market. You've worked in it a long time. Yeah. Look at the lenders you have on your panel. It's easy to go, that's the best rate, but actually it might not be the best deal or the best experience for the client, service criteria and things like that. So the market is really broker dominated, and actually for me, brokers do a good job. You see people signpost in the right direction. I use a broker when I want to get my mortgage done because I can see what's the best rate out there, but I don't know where they are in service and things like that. Yeah. So I think and especially in specialists, it's just
so nuanced, isn't it?
Yeah.
I think there's a lot of talk at the moment. AI seems to be the hot topic, and there are some camps that go, brokers won't exist in however many years. And actually, wider than that, you listen to some podcasts where they say that most jobs won't exist in 30 years, 50 years or something. I probably am a little bit more neutral on the AI front, and I think that the capabilities will keep expanding and it will do more and more, and the processing efficiencies will be hugely valuable and it will make us all a lot leaner. But what do you think about that? Where do you sit?
I guess AI is only as good as what you put into it, is the starting point. I think it will. I think that we should embrace technology. We're doing this with Rely. We're investing in our platform for the rest of the brands, and tech can make your life easier. The key and journey on the Rely application is 50% of what it is today on our existing platform. So that's tech doing that.
And is that, have you got AI in that, or is that
No, that's interlinked into the APIs we've got now. I'm not a tech expert, but it links into different bits. In terms of the valuation journey, the legal pathway and things like that. And so that's important. But, you can see how, if I look at live chat, which we operate on the websites, we get every year more and more people using that for quick answers. You can see how potentially AI might work in call centres with more generic questions. But I think, at the heart of what we do in specialist lending, and it won't, at the moment, almost every case has a human touch. Not every case will have a human touch going forward, but for those big complex deals, and also, we have hurdles where the borrower has to be interviewed. Well, we're not going to get a bot to do that. It's going to probably be an underwriter. So I think AI will have a place and it will evolve. And I think if you look at mortgage tech and the mortgage industry, it probably hasn't evolved as fast as other sectors.
I think we're quite poor for tech in the mortgage industry generally, and actually, interestingly, if you go back to kind of pre-financial crisis, we're almost just catching back up with where we are then. If you look at like GMAC, was it 60 second? I can't remember what they called it, but the
mortgage,
offers, whatever it was. And we haven't really had anything like that since, have we?
No, but I think, in terms of, I think what will happen now is it will go very quickly and catch up. Now, that's not to say, as I said, other sectors are probably more advanced, but if you look even in things like insurance and pensions, the platforms they use are a lot better than we have in the mortgage industry. And it's not that, I actually don't think that the mortgage journey is that bad. You probably bane of my life is often when it gets to legals, because that bit hasn't come along leaps and bounds either. But I do think, the evolution of tech and things like AI, brokers, lenders will consider how they can use them, how they can make the journey more frictionless.
Yeah, I mean, it's a minefield, and like you say, it's about what you teach it. And I think the tricky part, and it's like when you're upskilling people, it takes a long time to come across all the different scenarios that you can come across. And I don't know about you, but I still will have something come up where I'm like, I've not seen that before.
No.
I've not seen it before. I have to try and work out how to navigate that. So if people that have been doing it for 20 plus years don't know how to navigate it, there you assume would be limitations to AI. But I guess your brain either has that. I can't quite vision how AI can overtake people, but there are some people who really firmly believe that.
And I think it perhaps the middle ground, or where it will start to do it may end up doing certain tasks, but it doesn't replace ultimately the person at the end of the day.
Yeah.
Time will tell, hey?
Absolutely, yeah. One thing I was keen to get your view on is just the state of the buy-to-let market in general, because obviously it's a huge part of what we both do. And we've seen some huge changes over the years. And it's been getting harder and harder. Yet, despite all of that, I think it's fair to say there's still big pockets of it that are thriving, some that are surviving and some that are thriving. And I'm keen to hear your view, because you see it quite holistically as a lender, because you've got the different channels, from the more mainstream right through to the heavy specialist end, which is the InterBay brand. So what are you seeing at the moment?
Well, I think buy-to-let is really resilient, right? Whatever way you look at it. And probably if you go back to the financial crisis, it had never been stress tested because it had never gone through a downturn. Obviously, bad luck in the last 10 years since I joined OSB, predominantly a buy-to-let lender. What do we have? We had regulations, we had tax changes, we've had COVID, we've had Brexit, we've had a trustonomics, and it survived all of that.
Because it actually started, I think, the tax thing was announced in 2016,
10 years ago, I remember.
Yeah.
I just decided to go and join OSB, Kent Reliance, predominantly a buy-to-let lender, and the tax changes landed.
Yeah.
And it landed in tandem with the PRA rulings around additional underwriting for professional landlords. And actually, I always say to people, not all regulation is bad, not if it safeguards certain things. And I think, from a lending point of view, the ability to look at the wider portfolio and to look at these deals in bigger details has made the professional part of the market really secure. From a lending point of view, a safe bet. I think what we do see is that, buy-to-let as an entry point, if you think, I don't see too many first-time landlords come into the market. And we were talking on the way up here about, tax changes and navigating that. But certainly for those landlords that are in it full-time, and predominantly we see it in company names, I'm sure from a broking point of view, that's very similar as well. They're continuing to buy, to invest. They might have changed their strategy slightly. So we certainly see more people looking at multiple occupancy, high-end HMOs.
Yeah.
Someone who's sending his son off to college in a few days' time, knowing what I'm paying for the year and seeing where he's living. I'm thinking, that's not too bad. I don't remember doing that when I had shared accommodation. And I think it's those landlords that continue to build and invest. The other bit you've got to take into account in terms of the rental sector as a whole is about only 50% of all of those properties. It's about a fifth of the housing stock in the UK has got a mortgage on it. So a lot of people who've got buy-to-let are sort of exempt from some of these bits. But, and I think the other bits that we're starting to see is, I guess, people have gone out and the importance of tax advice that you get around that. And people that perhaps are disposing of portfolios, they're doing it in share purchases. And I think that would be quite a big market going forward. So, in terms of buy-to-let, yes, it's changed. Yes, it's probably harder if you want to get into it. But for those that are in it and know what they're doing, it's still a good, viable investment.
Yeah, and I suppose that probably is where all of the recent governments have been going with it. They want to professionalise it. Yeah. So there has been a drive to get rid of accidental landlords and one-off landlords, Whereas I think people used to really like that as a little pension pot, like a controlled pension pot where they could see it and they could go and visit the property and it wasn't someone else managing their money.
And it
But
was
that's
easy.
all but
Well,
done away with,
so,
really.
so if I look back 10 years, and obviously the brand I worked for before had a buy-to-let lender, a substantial buy-to-let lender. I always remember then a lot of the deals were let to buy. So people who had one property, they go, actually, it's really good. I can take some money out here, buy the other one with the deposit.
And borrowing was so cheap as
like
well.
like you say, yeah. And then have that one as that pension, or I'm going to give it to one of my kids, or whatever the planning was around that. With all the taxes, I guess, now on second properties, that might not have been, if you came to do that today, it might not be as viable. And also, if you're a higher rate taxpayer and it's in your personal name, all of those hurdles probably make that little bit of the market harder to do, which was where a lot of the market was 10 years ago.
Yeah, and the thing that I suppose concerns me with the market is that it's harder and harder for people to buy their own homes. And one of the unintended consequences here is that rents have just gone up.
Yeah.
Exponentially over the last couple of years, because obviously borrowing costs are higher, and then the more landlords that are pushed out of the market, the less stock there is, and obviously then you've got a supply demand and prices go up. So you need the professional end of the market to outstrip that, to ensure that actually people can still afford to rent and can rent. Otherwise, what happens to the renters market?
And I think that's such a valid point. And I think that's why you've seen diversification in terms of assets. So, how do I maximise the return? As I said, you're seeing more people convert properties, I guess. And we see that through bridging and for our Precise brand, people using the product to change the layout of properties. But you're right. I mean, you only have to go into where we are, central London, trying to get property. There's still queues of people trying to rent, waiting lists, and the returns and the rents are just going up and up and up. And you're right. Is that the unintended consequence of almost pushing landlords that way down the line? Because you as well as you want first-time buyers getting on the market, you want a thriving rental sector to support those that don't want to go on the housing market at this stage.
Yeah, of course you do. And actually, I've got some buy-to-lets, and probably the only positive thing I can say about my buy-to-lets over the last few years is that rents have gone up. Everything else has been an utter nightmare. And I think I'm not the professional end of the landlord spectrum, because I have a day job, so I don't have the time to invest in it like a proper buy-to-let landlord would. But it's really challenging. You overcome one hurdle, and then you've got new regulation coming out. That's sort of...
Well, yeah, you've got the Renters Reform Act, the EPCs. I mean, it's going to be really interesting around those, because I think they're going to happen. But if you just take the EPC bit as an example, if you went with a 2030 deadline, which I think is the one for existing tenancies, would have to be EPC C if it goes through. That would mean about 3,000 properties a day needing to be upgraded. Pose a couple of questions: where would you get the workforce? Where would you get the materials? Where are you going to get the money?
I think, though, one thing that we see, and you probably got better data on this, but all landlords want maximum loan to value. Typically, you probably have a more holistic view of that, but leverage wise, we often find that there's not that much left in it in terms of rental coverage and loan to values. So depending on how substantial those upgrades are, that could be quite challenging for people if they don't have the equity or the rental income to service the higher debt levels.
And it's going to be interesting to see if we see, people throw the word innovation around all the time. Mm-hmm. I don't think we see much innovation, but I think people throw it all around all the time. Someone goes, there's an innovative product with a 7% fee or a 5% fee. Is it really innovative? It's just adjusting a product. But, with some of those works, some of them will be minor to get them upgraded to from, say, a D to a C. But, you might have points where the property, you have to have it vacated to do the works, depending on the extent of it. You might want to do additional improvements. And it'll be interesting to see, if lenders come up with products that support those upgrades. Because at the moment, and you probably see it as a broker, everyone's just targeted A to C. Mm-hmm. Let's take that stuff that's already there. Well, actually, probably the bigger challenge is, how do we get the E's and the D's up to a C, and what's the product that will support that? So, as specialist lenders, I think we should be looking at that market and how we can innovate in that space. And from a broker's point of view, it's a massive opportunity because there are so many properties. I think it's about 60% that fall outside level C as well.
Yeah. What do you think the biggest challenge for landlords is at the moment?
Well, it's probably going to be in November, isn't it? Which is the budget at the moment, and what might come out from that. But I think it's, some of it must come down to confidence, because if you repeatedly beat someone with a stick, inevitably they're going to get hurt. And it does seem that landlords have had a lot levied at them in terms of regulation, tax changes, etc. And to the point you made earlier is, the unintended consequences are probably rents going up and a lack of stock and people coming into the sector. But I think, if you know what you're doing, and we certainly see that with the landlords we deal with, the bigger ones, they know their market, they're still seeking out those opportunities. But I guess it's the level of uncertainty of what might be next down the line.
I guess it's like anything where there's uncertainty and challenge, there's opportunity.
Correct.
Some people are in a position to take advantage of that and others not so much. But from our side, we are definitely seeing a lot of really active, repeat property professionals who are quite excited by this market. Whereas you see some people who are, they've just got a portfolio in the background, or, they're doing bits and pieces, and actually they feel that everything's going against them. So it probably depends a little bit on the market positioning, doesn't it?
And actually, if you think about it, debt is reasonably cheap still. It's probably a bit more normal.
People don't feel like that, but you're right. It is. And I think that's an adjustment that people haven't.
Yeah.
They've been so used to borrowing at ridiculous interest rates that people think that's normal.
And there's a fair amount of people that will have hoarded cash, I guess, or taken cash out of property when rates were cheap, depending what they've done with it, but they've made improvements. I mean, also from just the broker's perspective, the amount of renewals that are coming up over the next 12 months, fixed rate renewals coming off rates, and all lenders offering PTs, or perhaps properties have gone up in value in certain areas. There's definitely opportunities for reviews and I guess refinances if that's what people want to do. But I think you're right with that bit that you said about opportunity. And we certainly see it with a lot of the landlords we deal with. They're already looking, going, can I pick up that bargain? What can I do work for? And, you guys do a lot of the short-term lending as well. Can I bridge that, do some work, get a return? And as I said, actually terming it out isn't that dear at the moment when you go, there's a lot of lenders fighting for competition in the buy-to-let space. Yeah,
absolutely. And residential market, obviously you're in the specialist end of that as well. How's that performing at the moment?
Yeah, there's a lot. We've seen a lot of demand. We made some real. If we talk about the brands at OSB, we've given real clarity there. So we have our commercial brand in InterBay. Rely will be the buy-to-let brand, and Precise we'll use for residential mortgages and for bridging. We made a number of enhancements in terms of upping the loan to values in Precise to the higher LTVs, but also, like a number of lenders, we've adjusted the LTI so people can borrow more. So there's definitely a demand out there. There's definitely a demand that falls outside of the high street, which, it might be a credit blip, it might be 1 year self-employed. And again, a bit like what I said, actually, there's good value in rates out there. People are competing for business, that, because of the amount of lenders that you deal with. And there's opportunities, in things like shared ownership, affordable housing. So, Resi's been good for us this year. We've really pushed our foot on the accelerator of pushing Precise to be the front runner in that specialist space.
And are you seeing purchase business
going
as refinance?
It's a mix, Lucy. I think probably you'd say coming out of August, it's slowed a little bit, and of course some of the macro headlines don't help that. But still, we're pleased with the numbers that are going there. And again, look, we talk about cost of mortgages. There is some benefits that you've probably seen cooling in certain areas of house prices as well. And if you're a first-time buyer and you think, hey, that's a good bit, they can now afford those mortgages, probably a lot of them with the help of bank of mum and dad as well.
Yeah. And obviously getting your crystal ball out for this one, but there must be quite a few people in your business that give you forecasts and expectations around interest rates. And it's one of the things I'm always asked. So I'm going to ask you on our viewers' behalf, where do you see interest rates going in the short to medium term?
Well, if you'd have asked me that about 3 weeks ago, I would have thought we're going to have another base rate drop. It's this week, I think, as well, isn't it? So, but I think that's highly unlikely. I think the base rate will probably stay where it is now into the spring of next year, unless of course the budget throws something else up. But what do I know on that? I think what you are seeing is swaps are. You'd say they're still volatile. They bounce up and down, but they're not skewing
The
high
swings
and
are
low.
quite small, aren't they?
So-
Sort of under 5 basis points daily, generally.
So I think what you're seeing is the rates that you're seeing today are probably the normalised rates till the end of the year. You've got in residential, I think if you looked at Best Buy, you've probably got a couple of rates just below 4% or just above over 4%. And certainly in buy-to-let, you're looking, 5.5%, which is good enough for a functioning market. But also competitive enough that if people want a deal, they're going to do it. So I'm cautiously optimistic. I think it's a term I always use about how the market is, because I think for brokers there's a lot of refinances, there's a lot of opportunity in that, and with regulation coming down the road of what we talked in buy to let, there's opportunity there as well. But I think a lot of it will swing in the specialist market as well.
Yeah, and the market now, I think, is quite saturated, probably across all of the products that we both operate in. Over the years, sort of following the financial crisis, which now feels like so long ago, but you've just seen it go like that, haven't you? And the number of new entrants coming into the market, both on the intermediary side and the lender side, and you're all chasing market share, but there's also an element of just trying to do things differently. Are there any kind of big opportunities that you guys are spotting?
We've you've seen our half year results. We've done really well in commercial and bridging this year. We set out to do that. I think
so it's nice when a good plan comes
well,
together,
I like to
isn't
think
it?
so. Yeah, you get a pat on the back. But I think certainly in commercial, there's a real demand out there. You must see that in your brokerage house as well.
That, yeah.
And again, some landlords are diversifying into semi-commercial and commercial assets, but also there's a lot of people that are self-employed, and I say this to brokers out there, like, oh, I don't do commercial. I said, do you deal with self-employed applicants? Yeah, about 50% of my client base is, well, you've got some commercial opportunity. Now, you might not be the expert in that, but there's people that can help there. But yeah, I think, and again, it goes back to the importance of the role of the intermediary. There is so much choice for the end borrower that the role of the intermediary is pivotal, because there are so many different things that sit behind, I guess, the experience of the rate or the criteria or the assurity that lender's going to do the deal. The broker's kind of role is pivotal. But you could argue, you see a lot of new entrants, or I see a lot of new entrants in the lending space, or people rebuying lenders, and I kind of look and go, I'm not sure you're doing anything different, and it's really hard to crack a market where you've got established players in there.
I think so. I think it's really difficult for new entrants, and there'll always be some who are just superstars and they take off and they make it happen. But certainly in the brokerage space, one thing that we've seen is a huge raft of mainstream brokers moving into the specialist market. But it's all about volume, isn't it? If you don't have the volume, then you don't have the lender relationships in the same way, and you don't have that kind of, it's the traction, isn't it, with lenders to be seeing the volume. Because if you just get one here and there, perhaps you're not heard quite as well as those who are bigger players in the market.
And there are different products that different brokers get, depending, particularly as you go into bridging and commercial, that the volumetric brokers get, because they're, I guess, subject matter experts. Actually, they get introduced business, whether it's via broker or direct client, that actually their expertise in putting the case together, if you haven't done that, can be quite valuable as well.
Everyone can say they're an expert in specialist, but I do firmly believe that it's about miles on the clock, and it's about what you've seen, because I made the point earlier, I still see things from time to time where I'm like, I've literally never come across that before, but there is a lot that I have come across and I know how to navigate. But there's all, everyone has to start somewhere for sure, but there's a lot of people that call themselves experts out there that perhaps the expertise is a bit on the light side, but it definitely takes for a lot of experience, doesn't it?
Years of hard work seeing the deals, and we often say, particularly with those more complex deals, that when you've done some big deals with Aria over the years, is how the deal is presented. Because
first time makes all the difference, doesn't it?
Exactly, and then you get the whole story, and then you're able to shape the deal, and ultimately you want a smooth process for the borrower as well.
Yeah, and I think that's that first impression thing. If you send something over and it's not presented in the right way, and you lose someone's interest in the first go, it can be really hard to recover it.
Yeah.
Whereas it's all about kind of talking about the case from a rounded perspective, because what we don't do is sugarcoat. You know, if something's there, it's there, and you have to talk about it. But it's talking about the problems and the mitigants in the same breath.
Balancing act, isn't it?
Absolutely, yeah. Which is, you know, it comes with time, and I'm sure you see all sorts.
Yeah.
But probably your bridging business, you see a lot of that, because bridging is like a quick entry to market for some brokers, isn't it?
Yeah.
It's, everyone sees it as the holy grail. So you probably get some real weird and wonderful in the bridging space.
Yeah, and our bridging business has grown. So we have seen more people use it. And I guess we play more in the regulated space, which to a certain extent is probably more basic bread and butter.
And what sort of percentage of your bridging business is reg? Can you answer? Sorry if I
can't ask. It's in the PLC, so yeah, no, I can't. Well, what I can say is the majority.
Anecdotally,
yeah, anecdotally, the majority of our business is regulated, but we're growing into the non-regulated, looking at the more complex stuff. And of course, we do commercial bridging through InterBay, but you know, not everyone comes across a commercial bridge every day. You probably see more of them in area than an ordinary broker would do. And again, it's how you position that case and how you put the strengths of it. But I think, you know, from where 10 years ago we didn't do bridging at OSB then. Obviously we did when we acquired Precise, but that market has grown phenomenally, and of course more people use it, more people do the exit. So I guess ultimately more brokers have tried doing that. But I guess the more complex the case probably is when you need to pick up the phone to people that really know that market.
Yeah. And on the reg side, is most of that your typical chain break, or do you get people that are using their home to borrow money to go on to do?
So you get a bit of both. Yeah, chain break is quite common. You sort of you also do get people who've got an existing asset where they want to utilise that, plus the other one to bring down the LTV, bring down the rates, and the cost of if they're refurbing the other one or waiting for the other one to go there. But yeah, I think if you sat there, most of it is bread and butter. Still that person selling their home, or they want to buy that property quickly with a bridge for whatever reason.
Yeah, and you've done bridging across different brands.
Yeah.
What's the ambition moving forward for the bridging part of the business?
Yeah, I mean, you know, we have a really strong brand in the Precise brand in the bridging market. We want to grow that. We set up, we separated the sales team with the commercial team and the bridging team this year. We also launched the specialist property team in there for those more complex cases where you can speak to the team there that Peter Gregg heads up. And, you know, he's a qualified surveyor. So they know the kind of asset classes that we want to do. So, yeah, I'd like to say to those guys that sort of do some of the bigger stuff, watch out. We want a bit of that as well. But, you know, there's lenders out there that do it very well, and we're kind of catching into that groove.
And actually, one of the big selling points for OSB is you can do loans with not much of a cap on, really, can't you? If the right thing comes along.
Yeah, I mean,
we look at some really large transactions.
Well, we've done some with you and the team, Lucy, which is really good. And you know, I guess that comes with having a lending balance sheet of 25 billion. It's a big business.
Isn't it?
Yeah, it does help, and a big savings balance sheet as well. But I think that's where we position ourselves in the specialist market. Is, you know, we're not fearful of those large transactions. You've seen some of the press articles of some of the stuff we've done over the last 12 months. It kind of amazed me that some of the stuff we've done, but it's been good business. And having that understanding of large loans and actually having a process that works, is friendly, engage with the broker, engage with the borrower. And we've made improvements to our valuation panel, our legal panels over the last 12 months to make those sort of deals easier as well.
Yeah, and you have an in-house real estate team, don't you, that will kind of look at the transactions early on to get a feel for whether it's likely to have success at credit committee, because obviously if you haven't got those guys on board, then
you don't do it. And you know, they're very commercially minded. And the other bit is, of course, you don't, you know, if you're dealing with a borrower, ultimately it's your client. You don't want to spend what can be tens of thousands of pounds on a survey that comes back and we go, we're no longer going to support. So it's just that assurance.
Often there's something in what you know before you go to valuation that will kill it with a lender if it's going to kill it. So we always sort of say to people, you're better off front loading the work. Sometimes clients find that frustrating because you are going into a lot of depth. A lot of the time they want to call you up and say, I'm buying this property, can you do it?
Yeah.
And then when you go back and ask them 5,000 questions, I mean, I exaggerate, but
4,999.
exactly. You have to kind of really get under the skin of it, because otherwise you get down the line and there's something that you could have known really early on.
If you miss it, of course,
yeah.
and you're the front person for it.
Time and money.
I think that goes back to the bit, and with all of these in the specialist market, like you say, it's how the deal is quite often presented.
Yeah. And what do you see over the next 12 months in terms of like market size and opportunity? Do you think that we grow? Do you think that we continue to kind of be steady as we are now?
God, it's a really good question, isn't it? Well, the potential for more volumes out there in terms of refinance, how big the purchase market is, and whether there are any incentives that are going to help people get on the housing ladder will determine that a little bit. I think like a lot of people, everyone's waiting for that November budget, get that out of the way, see what surprises or not surprises are in there, and then you can move on. But I think, rates will remain competitive unless something dramatic happens. House prices are relatively stable to the point we talked about in buy-to-let. There are investors still looking to buy, and there's still plenty of opportunity in residential, commercial and bridging. So from a specialist point of view, I think we're in quite good shape.
Yeah, often when the market's challenging, the specialist end of the market does better. And that's what we've seen over the years. Yeah, absolutely. Well, it's good for us, isn't it? But obviously we want a healthy market overall, and really in order for that market to be healthy, you need the market to be moving, you need there to be transactions, because it's what.
And I guess confidence.
I think confidence is everything, actually, isn't it? And when you talk to people, you get a feel for where their head's at, and that really is quite reflective in the numbers in the market. And I know it obviously changes a little bit from what sectors you're in, but we find throughout the year, this year we came out really strong.
Guns blazing.
The first quarter was really, really strong, and then obviously there was a little bit of a stamp duty cliff again, wasn't there, which we saw impact the market, because I think you get all that momentum and then you go off a cliff a little bit. But then it feels actually like there's some excitement and positivity out there despite the headwinds.
I think we both said the summer was all right. You kind of go, August is August, people go away, but actually we sat there both going on the way up. Actually it was busier than we thought, and actually you go into September, things have kicked on, people are doing business. It's just about finding that and make sure you're the right one to support it.
Yeah, I mean there's definitely been headwinds, but I think there is pent-up demand, and I think there has been for quite some time. The expectation from borrowers is starting to align more, whereas we've spent a good couple of years where people have just gone, oh, that's so expensive, I'm not doing it at that rate, and you sort of let people go off, investigate the market,
come back and go, actually that's right.
Yeah, exactly. And I think there's a lot more pressure on pricing than there was when all of the rates were, okay, you still had some that were in the best buy tables and some that were slightly more expensive, but it felt like clients were prepared to pay more of a service premium previously, whereas at the moment, our experience at the front end, and I don't know whether you are as exposed to that or not, but obviously you're fairly close to the ground just because of the relationships you hold, but we find that there's a lot more shopping around and there's a lot more pressure on pricing that we're having to really explain it and go back again and again and again. And sometimes you're forced actually to, because we always talk to people if there's a better product out there, but sometimes people are sort of really hell-bent, no, that is the one I want to do. And even when you're saying, look, I know it's got a great headline rate, but I'm just not sure that's going to be the right one to get this done. Yeah. And often your instinct is right. And we're finding that we're faced with that challenge more and more.
I think because there's so much more talk and press and social media about where you can find mortgage rates in so many different channels now, can't you? And someone goes, I want that, and you're going, yeah, but that's not you, that one's you. But they then shop around and see if someone will do it like that. And quite often, we do see people have gone away, they've gone for that rate, someone's pushed them in, or not pushed them, they've gone with what the client wanted, it comes back, they go, oh, they didn't do it, and you end up doing the deal as well. So there's a lot to be said for trust in experience and in what your broker advises you, because I think they know a lot more than just the headline rate.
Yeah, absolutely. We've both been doing this a long time. New people, new entrants to the market, like what advice would you give to anyone looking to start a career in the mortgage industry?
Wow, that's a good question. I mean, as I said at the start of this, I probably ended up coming into it by accident. But there's never a dull moment. There's lots of different roles. I would recommend, people go, mortgage finance boring. Actually, it's not. The people in this industry make it. And actually, we're crying out probably for a new generation of people that come into the mortgage market. And, I look at our own business, the success we've had of people that we took on the telephony teams, really basic entry jobs. 3 of them are now BDMs. So if you push yourself, if you embrace what you can learn there's still really good opportunities here. And I think, financial services, mortgages in particular, specialist mortgages, because they're more interesting, right? They're not done by the machine. I think it's crying out for people that want to learn, are ambitious, and are prepared to drive and challenge themselves. So I think it's a really good sector.
Yeah, the barriers to entry are relatively low as well, aren't they? If you look at other professions like law and accountancy and things like that, it is relatively easy to get into the mortgage industry.
Well, I had no qualification to manage it, so there's a starting point.
Me either. I think it's actually quite a common theme in our sector.
But I think it's really good, and there's businesses like ourselves doing apprenticeships. There's paths that you can follow, and within, I'd choose our business within what we do at OSB. If you come in on the sales team and you came in at an entry level, and you want to progress, there's clear pathways on how you can do that, and people that you can learn from with bags of experience. So, I think, and it's busy, that, it's a really great sector for people to come into.
Yeah, I agree. And we've always tried to bring in people in entry level positions and train them. And I think actually that's where you often get the best quality of people from, isn't it? Because they get to experience it firsthand, and there's no sort of preconceived ideas about how things should be done.
And I look at people that have worked for me or worked for the business and moved on to other things, and they've all progressed. And sometimes you don't want to lose them because they're really good, but also you don't want to hold them back. And I'm really pleased to see that some of the young people that have worked with us, they've either gone on to they've actually gone to the other side and worked in broking and done really well, or they've gone to other lenders and progressed their careers in different ways. So I think, coming out of school, coming out of college, coming out of university, and if you're not sure what you want to do, it's actually I call it a good playground to come in and create an opportunity for yourself.
Couldn't agree more. Thank you
Pleasure.
very much. We really appreciate you
quickly.
joining us. It has, hasn't it? It's been great to talk all things mortgage industry, and thanks again.
My pleasure. Thank you.